Thank you. Good morning, everyone. It's wonderful to be here with you. Thank you also for the opportunity for us to come here and to share our views on what we expect from the world of travel for 2023, while also reflecting on some of the trends that we have observed last year and that may carry into this year. Maybe before I launch into the presentation, let me just introduce the Mastercard Economics Institute to provide a little bit of context on where I'm coming from. So at the Institute, we're a group of economists and data scientists. We look at the economy, because we're Mastercard, through the lens of the consumer. And we do that by combining the publicly available data, which all economists do, with Mastercard's own aggregated and anonymized sales activity, which then allows us to have a more nuanced view of the economy, which I'm hoping to share with you today. So maybe as a warm-up, I can start by showing you some of the fun things we can do with our data. So what you see on the screen is obviously a map of Europe with different lights on it. The different lights represent the cities, and the color of the light represents whether a city has experienced a growth in cross-border hotel spend relative to pre-pandemic levels, if it's in blue or in green, or whether it's experienced still a contraction relative to 2019 levels, if it's orange or red. The size of the circle indicates how much cross-border spend takes place in a city. So it's no surprise that cities like London has the biggest bubble because it's the biggest city in Europe, followed by Paris, which is the second biggest city in Europe. And then you can see Lisbon here is a relatively small bubble, so compared to these cities, the turnover is less, but you can see the bubbles also show the spend growth and what it looked like I'm showing November here, as a percentage increase relative to 2019. So 43% increase in cross-border hotel spend in Lisbon in November, compared to 7% increase in London, not to mention all the poor guys over here flashing red that haven't done quite so well. What's interesting, though, on the right-hand side, what I'm showing is an increase in absolute dollar spend from November 2019 to November 2022, and you can see that Lisbon experienced the highest absolute increase, which, given the size of the city, is really astonishing. It was the third largest increase among European cities, larger than right after Paris and London, larger than some of its regional peers like Barcelona. Madrid is not even on here, Rome is not even on here. So you can see it has outperformed a lot of bigger, major European cities that tend to attract a lot of tourism. If I go to October, you can see Lisbon is still number 3, and if I go to December, it slid down to number 5, but still, this is really impressive performance, given, again, the size of the city. Porto hasn't done too bad. It's over here. Increase in cross-border hotel spend is 26% higher in nominal terms. This is not real growth. This includes inflation. This is just money spent in Porto relative to 2019. So anyways, this was a warm-up. Really what I came here to talk to you about is more bigger picture on travel trends, which has travel has experienced an incredible recovery in 2022 that I wanted to reflect on and help explain, and then also explain what to expect from 2023 based on these trends. So obviously, inflation and rising interest rates has been the greatest challenge for the European consumers, for the global consumers we have experienced in 2022. We have experienced multiple of challenges that have made this macroeconomic backdrop very complex that Antonio was talking about, the geopolitical tensions, the pandemic, the energy crisis. But as an economist, let's look at the ultimate impact, which was inflation, higher interest rates, and how it impacted the consumer. The thing is, consumers continue to spend. In Europe, economic performance has surprised on the upside in every single quarter of 2022 and by a significant margin. And this outperformance has been driven by the incredible resilience of European consumers. And you may ask, how is that possible with the inflation that we see, with consumer confidence being at 40-year low, just as inflation is at 40-year high? Well, the reason is that the fundamentals of the consumer are quite strong. And I put it down to 4 forces. Number 1, household balance sheets are healthy. Household debt did not increase during the pandemic in most countries. In fact, balance sheets have been padded by a huge amount of excess savings that households have accumulated during the pandemic when we couldn't go out there and spend the way we used to. Second, labor markets are incredibly tight. European labor markets are still adding rather than losing jobs. Because of that, not only more people have income, have money to spend, even if a euro doesn't get you as far as it used to, but also there's a sense of job security that consumers get, that if I lose my job, there are so many vacancies out there, I can find another one. And that feeling is really important when people make decisions about spending versus saving. It's much easier to dip into your savings when you have greater sense of job security, or to borrow on your credit cards to maintain your standard of living while the times are tough, than it would be if unemployment was much higher. Then people would really just hoard their available resources and not spend. But what's important to remember is that consumers have also reprioritized spending, and I'll talk to that in just a minute. But that reprioritization has created a very bifurcated economy where certain sectors have done exceptionally well. Travel, it remains a bright spot, and certain sectors haven't done quite so well. So let me show you what I mean. Here I show our SpendingPulse data, which is our in-house measure of nationwide retail sales, which means it's based not only on MasterCard spending data, but it also reflects third-party survey-based estimates for other forms of payment by other card providers, cash payments, etc. So it's meant to approximate retail sales that you get from statistical agencies in any given country. Except this year, that didn't happen. Our data diverged. The reason it diverged is because official retail sales data truly looks only at retail. And as you can see in my chart here, as prices have risen, consumers have obviously spent more on things like fuel and convenience. Obviously, these are essential categories people spend more on. But what's interesting is to look at what happened in the discretionary category. We see a big pullback in spending on goods like electronics, home improvement, furniture. And then we see really large pickup in experiential sectors, which reflects the pickup in travel, like spending on lodging and restaurants. So we have seen this rotation away from spending on goods, which dominated spending during the pandemic when people couldn't go out and spend on restaurants, on travel. They sat in front of their computer and they were buying second screens and a new couch and the home desk and whatever. You can think back to your times. I certainly did. So now they're pulling back on spending on that and using the resources to fund experiences. Apparel has been mixed, but generally has done well in most European countries because it goes hand in hand with the experience economy. People had to get out there again. Instead of just buying the tops, they needed to buy the bottoms because they were going back to work in person. In some cases, people needed to buy bigger clothes. Weddings came back, so you needed to buy more fancy dresses instead of active wear, etc. So apparel has done quite well. What's interesting, look at the grocery category. Apart from Spain, despite the fact that it's an essentials category, so people have to eat, they have to spend on groceries, growth hasn't been that impressive. And the reason is, as we found from our data, is that consumers have really traded down in the grocery category. What do I mean by that? They bought cheaper alternatives of available produce, goods that they normally buy. So instead of buying a branded cereal, they buy the Carrefour version. Instead of buying organic, they buy regular food, etc. And this trading down allowed them to save some money, which then seemed to have been channeled towards spending on restaurant. When we compared eating out versus eating in relative to pre-pandemic levels, we see an incredible surge in eating out spend compared to the grocery spend, which goes again hand in hand with people just being so excited that finally, or were so excited in 2022, that finally after 2 years we're able to get out there, socialize, eat out, have somebody prepare our food, that the hospitality sector has done really well. So let me dive deeper into the travel demand. What I'm showing here on this chart first are bookings from our data. The red are the corporate bookings. I'm showing the global numbers first. The green are the leisure bookings, the consumer bookings. You can see that both have been above pre-pandemic levels since the first quarter, just as we came out of the Omicron semi-lockdowns, the last lockdowns. And we certainly weren't surprised by this huge outburst of bookings following the reopening, as obviously would expect people booking their summer holidays. But I have to admit, I've been surprised just by the resiliency of these bookings as summer finished, as we go into the autumn, people started booking the school holidays, the Christmas holidays. And while I'm only showing the data here for December, through the end of October, we do have this data through the end of December. I can show you the numbers, but I can tell you that it remains above pre-pandemic levels. So even now after Christmas, people are booking the ski trips or Easter holidays, etc., whatever it may be. So this pent-up demand for travel has not abated. On the right-hand side, just to explain, I'm showing the breakdown between domestic and international travel. The reason domestic travel dominates on a global level is really driven by the US. If we go to European bookings or really any other continent, it's international travel that dominates. Look at Europe. Consumer bookings above pre-pandemic levels, but not as much as at the global level. But business bookings being significantly higher. Look, in October, 30% increase relative to pre-pandemic levels. And that has been a real surprise, because with the advent of Zoom and MS Teams and video conferencing during the pandemic, we really were assuming that the business travel is dead. It's far from dead. It's more vibrant than the leisure travel in the current environment, because people realize that it doesn't, you can replace that human experience. You can live off the relationships you built before the pandemic for a couple of years, but then it was really time to reconnect with clients and have this more in-person interaction. I'll spend also a minute just talking about how the data break down by distance. Let me just start with global bookings. So interestingly, for business, most of the bookings are medium haul, which is defined as 2,000 to 4,200 kilometers. The short haul is roughly at pre-pandemic levels, and business long haul is a little bit below, but not too far below pre-pandemic levels. The reason long haul is still relatively behind, this is October data, is because obviously people are not going to Asia as much still. This is something that is obviously going to change this year. But leisure travel, consumers are traveling both medium haul and long haul. Long haul is really doing well for consumer travelers. Short haul, less so, and that is driven by Europe, Where short haul is lagging behind, which is really explained when we look at spend in other segments of transportation by the fact that we've had such mess at the airports this summer that for short haul distances, people have chosen to substitute into other modes of travel, take train, drive, take buses, whatever. Those have done exceptionally well in Europe, which is why the short haul flights are lagging behind. Just quickly, I wanted to just spend a minute on Portugal because Portugal is a good example of the wider Southern European trend. I was talking about the incredible rebound in business travel, and that is especially driven by Southern Europe. In Portugal, in Spain, in Italy, we have seen incredible divergence between business travel and consumer travel. So Southern Europeans really value this face-to-face interaction. We also see it in terms of working from home versus working from the office. Southern Europeans work from the office much more than the Northern Europeans. For example, let me just show you what this data looks like for the UK. You can see that here, it's the leisure travel that's outperforming the business travel. Similarly, if I go to Germany, you would see a similar picture. So you really see this divergence in business travel between different countries and really how they adjusted post-pandemic. Now, what do tourists spend on when they travel? Here we bucketed our spend into spend on experiences, going to Disneyland, going to amusement parks, concerts, restaurants, museums. We call that experience spend and we show it in blue. What we show in red is spending on things, so apparel, souvenirs, physical things. And you can see that really in all of the countries, spending on experiences by tourists is outperforming spending on things. Now, this could change this year because with China's reopening and the expectation of gradual return of Chinese travelers to Europe, they tend to spend more on things. That things spent is going to be pushed up higher. But still, there's undeniable trend that perhaps the pandemic changed for us, where we are just much more interested in spending on experiences than we are on things. So this is really good for hospitality sector overall. I have painted quite a positive story. We have seen an incredible rebound, but it's important to remember that in many European countries, and here I'm showing Eurostat data, so the official data, and I'm showing spending, the number of overnight stays in different European countries. Let me just take the most recent in October. And you can see that in most countries, number of overnight stays is still below pre-pandemic levels. In Portugal, it's actually 2% above pre-pandemic levels. The reason it's generally below is because so much of the productive capacity has been destroyed during the pandemic. So many businesses have closed. Not all of them have come back yet. And this is why, in addition to this absence of Chinese traveler, which was hugely important to European arrivals, it's also the fact that we're still building that productive capacity in terms of restaurants, in terms of hotels, to meet the demand, which continues to grow in countries like Spain, Portugal, Italy, Greece. So we expect these countries, as a result of that, to outperform not only on tourism, but economically in general. As we're talking about the risk of European recession, Southern Europe is definitely positioned a lot better than countries like Germany, which are more dependent on industrial output, on energy, not to mention more directly exposed to Russian gas in the first place. Finally, before I close, I wanted to just show one more thing, which is performance of small versus large businesses. Small businesses are indicated in blue, large businesses in orange, in the travel and entertainment sector. You can see the white line indicates the pre-pandemic level, that a lot of the businesses in travel and entertainment sector as of the end of September, in terms of spend, were still underperforming relative to pre-pandemic levels. So it's exactly the point I just made on hotels, that productive capacity hasn't come back. This is not surprising. But this is, if I show you in-person spend, you see a lot more businesses operating below 2019 levels. If I switch it to online spend, you can see greater outperformance above pre-pandemic levels. So what's the conclusion from this? The conclusion is that even though the economies have reopened and consumers last year have really preferred doing everything in person, having online presence is important to not only make companies more resilient against economic shocks because you have greater access to customers, you have greater ability to manage your costs, to manage your pricing, it's much more easily updated, not to mention it increases brand awareness and other benefits. But it is additional source of growth which is worth for companies to explore. Over here also you can, I'm going to do the count for you because obviously it's very difficult to do, but we show 25 countries. In 17 countries, small businesses are outperforming large businesses in terms of this digital performance. So this is my conclusion slide in terms of what to expect. Here I show the historical relationship between economic growth and passenger numbers. What the table on the right shows that, depending how you cut the data, whether you look at last 40 years or only last decade, the relationship between growth and passenger numbers is 2 times. So if growth in the global economy is 2%, passenger numbers grow at 4%. So travel grows faster than the rest of the economy because as countries grow and get richer, they tend to shift their spending more into services, which includes travel. This is why this phenomenon exists. On the other hand, travel as the ultimate discretionary good is also very cyclical. So if economies are not doing well, people tend to pull back on travel spend. They delay their holidays. Except that's not happening right now. We see economic slowdown, we see high inflation, we see rising interest rates, yet the pent-up demand for travel, as I showed you from the bookings, is not slowing. People still, whatever money they have, they do channel it towards experiencing life, towards traveling, eating out, enjoying themselves, socializing, and that segment of the economy is not in recession. It's not going to be in recession. I also mentioned that the gradual return of Chinese travelers, and I saw figures from the Chinese Overseas Tourism Board, that the expectation is that 18 million Chinese travelers will travel internationally in the first half of the year, 40 million in the second half of the year. So we would expect a gradual return. This is not this opening of the floodgates, because Chinese travelers need visa, we need to be able to issue visa quickly enough, airlines need to bring back the capacity to service these long routes. A lot of the planes have been grounded for these long-haul flights, and so that will take a little bit of time to bring it back. But I think next summer we definitely will see big benefits in Europe and globally from increasing number of Chinese travelers. So I'll leave it there. It was a pleasure to sharing this with you. Thank you so much for the invitation, and I hope to speak to you again in the future.